Hey everyone, welcome back to Invest Insight. Today, we're diving into something that always makes headlines. Warren Buffett started selling Apple quite aggressively. In fact, Apple used to constitute roughly 40% of his entire portfolio. When the Oracle of Omaha makes a move, the entire financial world pays attention. But what does it mean when Mr. Warren Buffett starts selling HIA Apple stock? Is it a warning sign, or is it part of a larger strategy? Let's break it down. And is there something wrong in the market? Why are FIIs doing record selling? For example, take a look at the data here. So FIIs are selling the Indian market quite aggressively. So why is this happening? Buffett says he is selling because he thinks stocks are trading above their intrinsic value, and capital gains taxes are likely to rise. So Mr. Warren Buffett revealed his answer, and the answer was something like this, that in the last few years, a lot of debt has been taken by the government. Now this year, for example, the U.S. government will be repaying its loan worth $1 trillion on the repayment. Now this is a very large amount. Where will this money come from? Well, this money will come from changing the capital gains treatment. And this is the speculation that is happening in the U.S. market also. And many people are selling stocks in the U.S. Now you will ask that, okay, what does this have to do with India? Well, in India, the story is even more interesting that in 2024, our LTCG, or long-term capital gain structure in equities, was changed. So previously, we used to pay 10% long-term capital gains on equities. Now there is a 25% increase to 12.5%. Right? So this has been a substantial change. And as a result, FIIs are selling the Indian market like crazy. Now you can see that you are, budget value. Now this change is done. So why so much panic? Well, the reason is something called as direct tax code in India. Now, as per this code, these speculations are that India will also raise its long-term capital gains on equities. Maybe it will be like 15% next year. Then, it will slowly being crept up, and at a point it will hit like 30%. So this is the speculation. And this is the reason why a lot of high-ticket investors who were invested in the Indian market, they have started to withdraw money. Indian bond market was killed after like 2016 demonetization, where Indian government announced the world that, hey, we can demonetize our own currency. And as a result, it created like a lot of panic. So to avoid any kind of panic, the FIIs are slowly selling the market. And this thing is unlikely to stop over the next few years. So this is the bad news. As for what investors should do, the answer depends on how much time you have left. If you think you will be around in 5 or more years, keep buying. Warren Buffett's moves are worth watching, but they're not a roadmap for every investor. His decision to sell reflects his deep analysis of the market, business trends, and valuations. But in the end, remember to focus on your own financial goals and do your research. Thanks for watching. If you enjoyed this breakdown, give it a thumbs up and subscribe for more insights into the stock market.